Hi, Harry here on May 19th, Friday. Um, Boy, the markets are really pushing it here. As we know, we saw that important first crash, and I was looking for that. The markets have been so overstimulated, so overperverted by the governments. They don't follow much of the expected patterns anymore. So we've just been watching for signs that this bubble was finally over. And we got that last year, as you know. It takes, and I looked historically, every major bubble in history, it takes a minimum 28% first crash off that high to say that bubble is over, and up to 50%. And what we got was the first crash and ended up last year of 38% on the NASDAQ, really well in that range, and 28%, the minimum, on the S&P 500. So that's, again, what told me we finally seen that first crash and the bubble is very, very likely over. Well, now we've seen the other side. We've seen a bounce. Now, just to go back in history, the best comp is the 1929 to 32 crash for this. That first crash had a 5-month bounce after a 40%, a 41% crash, first crash, a 5-month bounce, okay? Well, this bounce now from early October into May here is just over 7 months. So this bounce is getting very, very stretched. And unlike 29 to 32 or in past history when we've had major downturns, people didn't assume back then that the Federal Reserve was going to keep the economy going no matter what and stimulate no matter what. So that's where we are now. We're in a bounce that is stretched about as far as it should stretch. I'd say by the end of this month, this should be over, but it could be any day now. And what we're really looking for, the real resistance to this rally is very clear on the charts. On the way down in that first crash last year, the third wave down, the biggest wave down, had a very strong fourth wave bounce. The market was saying, okay, this is over. That was from mid-June of 2022 into mid-August. So that mid-August high in any major index like the S&P or the NASDAQ or the Dow, that is the real resistance. Now, the QQQ, which is the strongest NASDAQ 100. You got to remember, when times are tough and when the dumb money's piling in at the end of a long rally, they buy the largest cap stocks. They don't have the sophistication to buy small caps. So in the late stages of this boom, the large caps outperform the small caps very clearly. Well, the same in this bounce, okay? The NASDAQ 100 has done better than the NASDAQ. The S&P 500 has done better than the NASDAQ. And the Dow has held up the best of all. So the large caps do best here. So what we're looking at now, that target, that mid-August high on the NASDAQ was 13,186. That's just about 4% higher than the levels here today on Friday, okay? The S&P 500, that mid-August high, 4,320. That's about 3% higher from here. And again, QQQ, which is the favorite right now. It's the largest cap NASDAQ tech-oriented stocks that already yesterday hit that level, that mid-August high. So we are very, very close, or should be very, very close to the end of this rally. And what are the next targets? And I've said this before. It's very simple, very clear. The COVID lows, like in March of 2020, that is 2190 on the S&P 500. That is about a 50% fall from levels here or just a little higher ahead. It is 6,667 on the NASDAQ. That is also about a 50% drop. So percentage drops. This should be larger than the first crash, okay, down. And this bounce has already lasted 2 months longer than the 1929 to 30 first bounce, and similar in 2002. So again, critical time. If you have any stocks left to sell, you intend to sell, I'd do it by the end of this month, and certainly anywhere near these targets. Again, 13,186 on the NASDAQ, 4,320 on the S&P 500. So watch the markets carefully. This is the time to be decisive, and certainly I will keep you updated. And most important, I want to remind you that we have a special on our newsletter at this very, very critical time. We want to get everybody on possible, okay? We're offering 30% off the normal and very affordable $249 annual rate, okay? So all you have to do is go to the link in the description along with this, and note that is $14 a month, okay, at this discount. So again, you want to get on our newsletter and learn a lot more at maybe one of the most critical times in financial and stock market history. Get on our newsletter now at this 30% offer. Just go to the link. Thanks.